So this is the framework for site selection and determining what the highest best possible use of the site is actually going to be. So when you start with site selection, you start with the physical characteristics, the market analysis, and infrastructure tests. For example, physical characteristics, what the site is in shape, size, is it broader at the front or narrower at the bottom, narrower around the back. What are the legal implications or legal covenants on the site, the location, the services, is there water coming to the site, is the sewer connected to the site, environmental, the zonings that the site comes in, because each zoning would come in with different set of restrictions of what you can do on the site, the building envelope, views and orientation. All these things go into the physical characteristics of the site, and you have to know how to analyze each one of them in order to be able to get to in order to be able to shortlist these sites. The second group is the market analysis, which is your general market patterns, the micro markets. So there could be a niche market within a broader market that you can target. Consumer expectations, what are they looking for, what kind of design, what consumer what impact would the consumer expectation have on the design? Are they looking for two-betters, or do they want a bigger balcony? Do they want the reverse living, for example, so that they can enjoy better views? Future market potential, demographic profiles, the sales and rental data, infrastructure tests, for example, are there services to the site? Is there planned infrastructure that's coming to or close to the site that you are developing, and different environmental issues. Once you've gone through all of these, you can then analyze site 1, 2, 3 and shortlist them, which basically helps you define your search criteria. And then you can screen the alternatives based on a qualitative criteria, which is basically the different suburbs, different sites that you compare, and the quantitative criteria, which is your smart feasibility. For example, you do a back of the envelope feasibility, or you do a 2-minute feasibility, or you do a full-scale feasibility, and then compare them against your objectives and against of the different metrics that you put together, so that you can go ahead with the development. Subjective preferences, for example, your personal preferences. So you might find a site that's really good, but it might be too far away from for you to travel to or conduct meetings, or have issues finding different contractors to be able to execute the development. Then you also have to figure out, after you have some acceptable sites, you have to figure out what your individual needs are going to be. Whether can you execute that kind of development that you shortlisted? Have you got the skill set, or the experience, or the financial capacity, or the strategy, so that you can flip, develop, or control that property, and so on. So in your financial impact forecast, you will figure out how much private capital do you require, the total required capital investment, is there a public capital subsidy in that area, developers equity contribution of the money that you will have to put in from your pocket, your total exposure, that is the total debt that you would be exposed to throughout the course of the development, your alternative uses, your alternative revenue, your financial structure. The financial viability will then depend, will tell you your return on equity, your developer's equity contribution or capital investment, or your total debt exposure. Once you've got all of these, you take your shortlist to look at the best probable sites, test them against your investment criteria, and your investment test will be based on your investor limitations and objectives, your acceptable risk, after-tax cash flows, financial ratios, and sensitivity analysis. Your final decision would then you will have to figure out, your final decision will be based on your highest best possible use of the site. That is, can you maximize the site, what is the density, what is the zoning, and what does the town planning actually say. So this is the end of the Mastermind Your First Development, and in this we've actually gone through the 6 core cornerstones, or 6 pillars of property development, which is market research, um, which is basically your market research and marketing. So this is your entry and this is your exit. So you need, and your entry this research would actually determine whether or not your product that you're developing, who you're going to market it to, and whether or not it is going to be marketable to them. Then you've got your decision making framework, which is basically all these things will depend, will impact your decision in order to when you're thinking of doing a development. And your investment strategy, which was basically figuring out what do you want, how much money have you got, can you do this, have you got the skills, and after you've done that, what is it going to look like in terms of cash flows, and so on. Your development strategy, which is going to be all these things that will then flow into your development strategy. And there are 6 strategies that I discussed, which are the only 6 strategies that you need to understand in order to do any kind of in order to make profit from any property, so to speak. And then your highest best possible use framework. So I hope you enjoyed the Masterminding Your First Development course. It's a very short course, and but I wanted to give you guys this framework to be able to think about and absorb and get an understanding of what is involved in doing a development.